Hi, I'm Ross from Coombs Smith Chartered Accountants in Hamilton. We're a firm who specialise in property investment, and all our clients are property investors or property developers. So obviously today everyone's panicking a little bit about the new announcement of the government, and that Labour and New Zealand First are in government. So what we're sort of going to look at is what that'll mean for you as a property investor, and then at the end my guess I suppose on what that's going to do to the market and what's likely to happen with it. So the first thing I'd sort of think about is don't panic. It's not the end of the world. Property prices are not going to plummet. Your houses are not going to be worth half what they are today. Really much I'm expecting it to be business as usual. If you're a buyer, take your time. There's no rush to go out and buy an investment property tomorrow, so I would take your time. Yeah, just the same as what I've been suggesting for the last 6 or so months. Take your time, make sure the numbers work for you, and make sure that the investment property really stacks up, that it meets your aims. And I'm looking at the moment for properties that are cash flow positive, so that means that the rent pays for the expenses, or that you have some sort of twist or some way of changing that over a relatively short period of time so it'll become cash flow positive. So the big things that are going to change that we know about at the moment, one is the Brightline test is likely to change to 5 years. So at the moment we have a 2-year Brightline test. You buy a rental property, if you sell it within 2 years then the gains will be taxable. That's likely to be extended to 5 years under Labour, which to me it's actually a good thing. I suppose it separates the speculators and the investors. To me it's actually not a bad thing at all. You just need to be careful, make sure you do actually buy long-term rentals, and make sure you get advice before selling, and obviously check whether your 5 years is going to be up or not. One thing I would like to see put in, and we'll be trying to talk to IRD along with many other professionals, is some sort of allowance. If you're restructuring to a trust, for example, you want to put your rentals in a trust for asset protection. At the moment you can be caught by the Brightline test. So what we're obviously hoping long term is that could change, that you could restructure from say your personal name to a trust without triggering a sale for the Brightline test and without the gains being taxable. Second thing that's likely to happen under Labour that they've announced previously is that they're looking at taking away the tax refunds for rentals. So at the moment, if you've got a rental property losing $10,000 a year and you're on the highest income, that $10,000 loss will offset your personal income, and you'll save $3,300 in tax or get a refund of $3,300. With Labour, they're looking at taking that away. My guess is that won't be implemented until 2020 at least, so it's a couple of years away by the time they get organised, time they consult with IRD, and by the time everything actually happens. And then it's over a 5-year period as well, so you're actually looking at quite a long way out before that will really impact on you. And the key thing to look, which I'll discuss further on, is I suppose it's trying to get your house in order before then, and try and get yourself to a situation where you've got passive income, positive passive income. There's likely to be less immigration. That's obviously a key thing that Winston Peters is always on about, is trying to reduce immigration numbers. So less people, need less houses, so that's going to lessen the demand on rent and prices. So that's actually a twofold. As a property investor, I'm really focusing on rents. To me, that's what's important. That's what pays the bill, is the rent coming in. So if you have less people from immigration, that's likely to reduce rents or stop them going up so much long term, and it's also going to reduce the demand on houses, so reduce their growth long term as well. Whether it actually works long term, who knows. The downside is if you don't bring in skilled immigrants, then we can struggle to have the population of skilled workers that we actually need to survive as a country. Labor's also looking at making life easier for renters. So they're looking at doing things like extending notice period from 42 to 90 days, limiting rent increases to once a year, and taking away letting fees. I personally don't think some of those are right. I think letting fees, it just gets passed on to someone else. So yeah, I actually don't like that one. Some of the other ones are okay, but then yeah, sometimes you do actually need to get rid of a tenant, and it's not particularly easy sometimes. So the 42-day notice was an option. So that's going to make life harder for property investors. And long term, the one that's been in the media lots is capital gain tax. We're expecting the long term there'll be some sort of capital gain tax brought in. To me, that's not the end of the world. The first thing is if you don't sell, there's no capital gains tax. So that's the crucial thing. If you're a real long-term property investor, you're not going to sell, so it's not going to affect you at the moment. If capital gains tax does come in, it's likely to come in from a certain date. So all your capital gains to date are not likely to be taxed, but in saying that, the devil is always in the detail. Until we have the exact detail, we won't know. But what I would expect is capital gains tax to come in from a certain point, maybe 3 or 4 or 5 years from now. Properties to get valued at that date, so all your capital gains to that point to be tax-free capital gains under the old rules, and then any gains going forward to be taxed under the new rules. So it's not actually going to be that nasty for existing property investors, and also the tax rate on capital gains is going to be lower. So to me, if I have a property that went up in 100,000 in value and I ended up selling it, if I had to pay 15% or 15,000 in tax, that's actually not so bad. I would have got the 100,000, paid the 15,000 tax, had a net gain of 85,000. That's not too bad at all. So what should you be doing as a property investor now? The key thing is to concentrate on the basics. I've got a couple of little items which I call the real basics. One is rent reviews. You should be regularly reviewing your rent. It's a critical element that your rent needs to go up over time, so that you have more passive income coming in, more income to pay your expenses, which is obviously a key of a whole business. It's treat property investment as a business rather than just some sort of hobby. Second is actually have a strategy. How are you going to get passive income long term? We've got some seminars and things coming up to help with that, and yeah, on our newsletter and on our Facebook posts, if you like it. If you join our newsletter list, you'll see I post quite a lot on strategy, and we've got some more documents coming up on this. We did one a few weeks ago that I wrote for Waikato property investors, and that finishes off in the next couple of weeks, the second half. So you might want to like our Facebook page or join up our newsletter to have a look at that. Third strategy, real basics, is pay down debt. Less debt, less interest, more cash flow. So I'm a great believer in paying principal and interest. Fourth little basic is some sort of twist. Can you renovate your property to improve rent? So can you give it a new paint, new carpet, tidy up the kitchen and get an extra $50 a week? That can be a really, really good return. You can get over 10% yield, which is obviously much better than you can buy at. Other twists, to me, it's all about trying to do something different. So add a minor dwelling, turn your garage into a sleep out legally, add a bedroom, and again legally. So we're looking at trying to do things that will get more rent, and the biggest one, if it is possible, is subdivide. So you might subdivide and build on the back, or subdivide and sell. Obviously, if you subdivide and sell, the starting point is taxable, so make sure you get really good tax advice. Next little tip or basics is make sure you get your accounting and tax structures right. You want to maximise your deductions and make sure you're getting the best tax position possible. With new rules constantly coming in and with these changes likely to come up, it becomes even more important that you get a property accountant, someone who truly specialises in property. They'd normally be a chartered accountant, so they actually have been to university and have some good knowledge and skills, and someone who really concentrates on the market, up with the tips and tricks, and can maximise your position. And lastly is review your position, your portfolio. Review your portfolio. So actually look through your properties. Are they performing for you? Are they actually helping you achieve your goals? If you're a serious property investor and you buy 10 rentals, realistically one of those is what is going to be a lemon. It's going to be a mistake. It's going to be a crap property in a crap area that's not going to get the capital gains or the rents that you're after, and sometimes you have to sell that. It's similar to what dairy farmers do. They cull off their bad performing cows so that they have more room for better cows. And it's the same with property investing. Sometimes you have to cull off a property so that you go back one step, but then you can move forward quickly with 2 steps. So the other things that I think will change slightly in property investment is it's going to be harder to gamble on capital gain. It's going to be harder to buy a property that doesn't stack up, hope that jumps up in value and hopes that you make a lot. It'll be harder for 2 reasons. 1, you're likely to get taxed on your capital gains long term, and 2, you're not likely to get a loss or a tax refund back on your day-to-day holding costs. So yeah, property investor is going to turn less into a speculation probably and more into a real property investor, someone holding it long term. So I hope you found that useful, and like I say, we've got lots of cool things coming out. Got a few more videos coming out. We've got some posts coming up on strategies, so make sure you like our Facebook page or sign up to our newsletter, and yeah, also watch out for our seminars coming in and seminars coming up. Mainly around strategies and 19 things that you must be doing as a serious property investor. They've got some great information, and yeah, after we run a couple of those, we'll record one of those, so we'll be able to send it to you if you're on our newsletter list as well. Thank you very much.